Good afternoon, all of you. Myself, Pawan Jaiswal from Team TraderSmith India. I hope that my screen is clearly visible and my voice is also clearly audible to all of you. So today is 8th August 2024 and market is now facing little bit jittery, and amid this situation some global uh, negativity, we are conducting this Bazaar pe Charcha. So before discussion anything further, let's read this disclaimer for you and then we will start today's session. So disclaimer, that is registration granted by SEBI, membership of BASL and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. And your company name, SEBI registration number, office address, compliance and grievance officer, email ID, contact numbers are given. So let's start a session. So after touching 25,000, even it has crossed 25,000 and it remained traded for a couple of hours. And then market started falling mainly because of global issues, especially that US economic data, followed by some fear because market is at higher level. So that is why it is facing. And after that, it is showing some negativity. And from 25,000, there is a sharp fall happened up to 20, even below 24,000. And currently it is hovering around more or less 300 points, around 24,000. So roughly, I can say market has fallen 1,000 points, or market has shaved off almost 1,000 points from the recent all-time peak, and showing some sort of negativity. So to this particular chart, this particular uh, slide shows sectoral index performance as per O'Neill methodology of direct market direction. And as per O'Neill methodology, you can see even though there is a fall of 1,000 points, Nifty and Sensex has generated more than 3.5% negative return, to be precise 3.65 around. But even its market status still positive or rally, because it has not breached 50-day moving average decisively. And that is why we are still holding our stance to rally. But maybe suppose it will breach, and this distribution day is also not that much elevated number in Nifty 50. So that is why we are still keeping market status to rally. But maybe in coming days, if one or two, one or few more distribution days added in number of distribution days, and suppose it will breach 50 DMA or any other key moving average like 100 DMA, then definitely will move this market direction under pressure. Especially if it will breach 50 DMA, then we will move this market direction from rally to uptrend under pressure. Apart from that, if you see other indices, so it is showing mixed kind of situation. Bank, from the last so many months, we are consistently discussing with you that it is underperforming to market. And in current scenario also it is underperforming, and most probably in coming days it may remain underperforming to benchmark index in Nifty 50. So benchmark underperformance, that means maybe if Nifty will fall currently, Nifty has fallen and Bank Nifty has fallen, but if you calculate the things, so it has fallen more over a period of time. Like if you see in last 1 month, Nifty there is a fall of 1% to 1.5% in Nifty 50 and Sensex, while Bank has fallen around 4%. Yeah. So I can say it is there is showing underperformance. Likewise, it may happen in coming days also, coming weeks also. There may be possibilities are quite high that there may be remain underperformance in bank, continuation of underperformance may remain intact in coming days and coming weeks also. Apart from that, Pharma is showing confirmed uptrend, trending near all-time high. FMCG is trending at all-time high, and it confirmed uptrend. And then metal is in correction, clear correction, and we are expecting more correction in this metal index and metal sector stocks. I think it is just this beginning of serious correction after hitting uh, 20 almost 97 9800 kind of levels in metal index. Auto is showing some sort of under pressure, and IT and financial services are also showing. So I can say here broadly, even though Nifty 50 and Sensex are still in confirmed uptrend, we are waiting to breach 50 DMA decisively, then we will downgrade. But yes, if you see the major indices like IT, FMCG, auto, metal, energy, all are under pressure. Only pharma and FMCG in uptrend. Otherwise, IT and this auto and metal and banking is in under pressure or in correction. So roughly, if I categorize in percentage weightage wise percentage market, so more than 70% of sectoral indices of broader market is trending in either in under pressure or in correction. So majorly is trending into under pressure. So now let's see how it is placed on market, how it is placed on chart actually, Nifty 50 especially. So this is the Nifty 50 daily chart. This is the Nifty 50 daily chart on MarketSmith India platform. And here you can see it has already breached this 21-day moving average, and decisively it is trending below 21 DMA. This and black color line is 50-day moving average, and it is just holding 50-day moving average and above that. And the day it will breach, maybe definitely we will downgrade the market. If and another thing is that um, if I talk about, let me show you another format of chart. Uh, Wait 1 second, it is opening. Yes. So it's up and down. So here, if you see, this is the election outcome day, and I am just trying to draw a pattern on this chart. So there is some, which kind of pattern formation of panel, I can say terminal terminal triangle pattern formation happened on Nifty chart, or I can say wedge pattern. In technical analysis, it is called a wedge pattern. Just joining a low of 4th June, that was the election outcome day and budget day. And it has decisively breached this low, upward sloping lower band of this trend. And now it is comfortably trending around that. And currently it has, and on, few days back, it has breached 24,000 also. Another thing is that if I take this Fibonacci retracement of this entire rally, so I can say in short term also, it is a quite possible that Nifty possibilities are there that most probably Nifty will breach this recent low of 24,900 and maybe fall further below toward maybe 24,000, 23,600 around level in coming days. So from the point of view of moving average point of view also, if you see here, moving average, so 50 DMA is placed just around approximately 23,900, and then 100 DMA is approximately placed around 23,100. Roughly, I can say 23,100, 23,000 around. So maybe, in my opinion, the day it will decisively it will breach this 50-day moving average, that is 23,900. So maybe next target would be in Nifty 50 around 23,600, 23,500, followed by 23,000 to 23,000 kind of levels. So possibilities are there, and maybe the way market is behaving, maybe it may fall further in coming days, but at the same time, some bounce back cannot be denied. So bounce back may happen. And if I talk about levels point of view, Nifty 50 in upper side, unless and until it is trending below 24,600, it will remain traded in pressurized manner. So in upside, 24,650 is a level exactly. 24,650, unless and until it is trending above that, it will remain in pressure. And maybe for decisive falling below 23,900, this fall may accelerate further in downside. And all this negativity is happening not mainly because of this domestic reason, India prospective reason, because there was a today there was a RBI policy, and RBI governor has also said that we are not in hurry to cut short this interest rate, cut down interest rate, because of there is an inflation, and inflation means inflation. So inflation is still not in that much. So in some segments of market, inflation in India is still not under control. So that is why RBI is not thinking, even though they has given some accommodative kind of stance. RBI has given, but maybe possibilities that in my opinion, what RBI don't want to be a leader in the rate cut cycle. They just want to follow the global uh, market, and especially global market means especially USA. So maybe USA, next cycle, that is due in August September. Due in September, maybe there will be a rate cut, and then we can expect now. If we talk about India point of view, so this is August October. Next cycle meeting will be in October. Then maybe we will see some news comment from RBI that what they are thinking, whether they will ready to cut interest rate either in December or in February, but not before that. I'm expecting maybe governor will or RBI will give some indication of rate cut, especially in India, either maybe in December or maybe in February, not before that. So we are still almost in waiting period of another 3-4 months, I can say, in India perspective, but maybe in USA especially. So currently market condition, global market condition especially, is a mixed kind of thing. Like if you see, the USA is showing different thing. Then Japan, there is some problem happened because of this interest rate only and the inflation in Japan. European central banks have cut some interest rate while Japan has increased interest rate. But at the same time, some geopolitical tensions are also happening in this Middle East and Israel kind of part. So after and then this entire market is all-time high level. So considering all these factors, also maybe some negativity cannot be denied. And anyway, if we talk about correction, so 20, if I take 10% of conservative approach of 10% of 25,000, so that comes to 22,500. Then also our Nifty level may be 22,500. But I'm just saying it. It is not that it will fall up to 22,500. But yes, technically I can say that this 100-day moving average, this green color line, is currently placed around in the range of 23,000. But yes, in between there is a support also. So maybe Nifty has support around 23,600 kind of zone, and then maybe followed by 23,000. But to fall up to that level, it must breach this 50 DMA decisively with both big volume and remain in continuation. So unless and until it is holding this 50 DMA, there is a hope for a reversal. But suppose it will not breach, then maybe it may fall further. But at the same time, upside to turn bullish from current level of this 24,600, 24,700 is a critical level. Unless and until it will not cross that level decisively with volume and close above that 26,000, 24,600, 700, it may remain traded like jittery manner, like it is trending at current point of time. So in short, in nutshell, I can say in downside is 50 DMA or 23,900 is a key level to watch. Suppose it will breach, then maybe we can expect more negativity. If it is holding, then one can expect bounce back toward at least 24,500, 24,600. But to turn more bullish, in my opinion, at least, in our opinion, at least, it must cross and hold about 24,600, 24,700. Then only we will consider continuation of full fresh bullish trend toward 25,500. Otherwise, not. Okay. Now, Bank Nifty. Bank Nifty here, you see, it is a clearly showing underperformance. Like it has fallen almost 4%, 4% around level, and it has approached to 50, 100 DMA. It is already in under pressure as per O'Neill methodology, and most probably the day it will breach this 100 DMA, where current 100 DMA is placed around 49,300 kind of zone. So the day it will breach the 24,300 or 100 DMA, maybe we will further downgrade this status of this Bank Nifty from under pressures to correction. And overall, it is showing underperformance. And in my opinion, in our opinion, it may remain in this underperformance may remain in continuation in coming weeks. And then there is a possibility of this rate cut and everything. So because of that, it is going to be quite volatile in coming days and coming weeks. So I am facing some issue in my chart. So I am not able to open another format. But here I can say clearly this possibility. If I draw a trend line here, this particular trend line that I would like to show you, from the low of almost 42,000. So unless and until it is holding above this trend line, which is almost placed in the range of 100 DMA, possibilities are there. There may be bounce back happen, and suppose bounce back will happen, then maybe one can expect this particular zone is a critical, roughly, which is almost 1 minute. I will show you, which is almost this particular zone, almost 52,000 kind of zone. So I can say roughly 49,000 and 52,000 is a zone. Suppose it will hold 49,000 kind of zone. So maybe bounce back possibilities are there that it may bounce back toward 52,000. And suppose it will further cross above 52,000, then one can expect up to level of up to 55,000 also. But possibilities are quite low. I'm not saying it will cross, but yes, the day it will breach this 100 DMA or the support sloping trend line, maybe we will downgrade and maybe it will ready to fall toward almost the level of 45,000 kind of zone, 46,000 kind of zone in downside. So this underperformance is there and may remain in under pressure. And if you see, majority of the bankings are not doing good, but few banks like SDFC Bank is structure is positive, so maybe it may gain in coming days if Bank Nifty will show reversal from current level. Disclaimers that we have already added Bank Nifty in our TraderSmith portfolio. Otherwise, Bank Nifty may remain traded in sideways. Current zone is in Bank Nifty is 49,000 to 52,000. Crossing above 52,000, maybe possibilities are there that it may cross, it may go toward 52,000 in next couple of months. But at the same time, falling below this 49,000, possibilities are there. It may fall toward 46,000 also. So there is some mixed kind of scenario, 50-50 kind of scenario at that. And in entire this banking pack, if I talk about frontline banks like SDFC, ICICI, SBI, So SDFC is comparatively looking quite positive. FDFC charts is looking quite positive compared to other top banks. So because of that, in this volatile market, we try to add this SDFC bank in our TraderSmith portfolio. Apart from that, FMCG index. So FMCG index in confirmed uptrend as per O'Neill methodology, and if you see from the last couple of weeks, it is trending in this sideways zone only, in the range bound, that is almost 59,000 to almost 63,000. Even though a few days back when there was a fall happened, so it has not reached 21 DMA as well. But today there is some news happened that there was a low volume growth happened in June quarter, and maybe we are going to expect even the FMCG index has given negative almost. It has fallen almost around 0.5 0.6 percentage today's trading session as well. And maybe I am expecting more fall may happen in maybe tomorrow onward trading session, because there is some negative news happen in today's session, and maybe decisively it will breach 21 day moving average. So roughly I can say in FMCG index that 60,000 is a critical level to watch in this FMCG index. Suppose it will breach this 60,000 kind of zone, then one can expect more negativity happen. But still there is a not possibly there is a no sign that it will fall. But yes, just keep watching levels. So 21 days exponential moving average, then 3 4 days back there is a low happen, and that low is 60,800. So just keep watching level of 60,800 followed by 60,000. Unless and until I can say, unless and until it is holding above 60,000 zone, I can say it is a normal course of correction. But the day it will fall below 60,000, then I can say there is some serious correction started in this FMCG index. Otherwise, maybe it will remain traded in sideways only. So just note that this level, uh, almost 60,800 is a first support area. That is this particular low level, this particular low, and there is a price cluster as well. And then followed by 60,000 is a final short-term major support area. Suppose it will breach 60,000, then only we will consider, or then only we can say, and then only we can comment that there is a possibility of further fall toward at least 58,000. Otherwise, there is a possibility that it may bounce back. So let's see how this market will react, or this particular sector will react in tomorrow's trading session after this news. Otherwise, structurally, it is still in bullish trend. And if it will remain in continuation, so maybe possibilities are there that it will gain. But yes, net to net, I can say in this current scenario of market, FMCG may remain outperformer. Even there is a correction happened, so one can grab this opportunity to buy good quality stocks from FMCG stock from coming weeks and coming month perspective. And major support is placed around 60,000. So Nifty 50, Bank Nifty and FMCG I have discussed in detail manner. Now my colleague Yatisha is here. He will discuss few sectors with you.
Thank you, Pawan. So let me start with the Nifty Pharma. So this is a sector where it has outperformed among all the major sectors. So especially in the last 3 months, it has been given a very good return. And if you can see here, once it breaks out from the sides consolidation range over here, of somewhere around 19,500 kind of level, and retested that level, and it has given a very good run in the last 3 months. So even among all the sectors, last 1 month, be last 1 week, so it is still trading in the bullish zone, and there is no sign of any weakness so far in Nifty Pharma. So today, it's still trading at nearly all-time high levels, and key level to watch on the downside is this trend line. So that it comes it touches the major three lower low price structures, So that is along just below, just marginally below its 21 DMA. So exact level is currently it's around 21,000, we can say. So 21,000 is a key level to watch on Nifty Pharma. So until and trading above this level, so there is no major sign of any weakness, and continue to ride this index for the further upside. And the next sector is Nifty Auto. So Nifty Auto from last this week especially, so it has been outperforming from the last 6 months, and it has generated almost around 26% in the last 6 months, especially from the April and March, April, from the since April. But right now, from the last 1 week, you can see here, especially from the August 1st, the index has been slightly witnessed the profit booking, and also it has breached that pre upward sloping trend line from connecting from the November of 2023. So that is a major trend line break, and from last 3-4 days it's trading in the sideways range. So henceforth, like further, this level, that is a gap down area. So to and also 50 DMA, which is somewhere it is placed around here, it's in the same range. So that is around 25,100, 200 kind of level. So that is going to be a key resistance area for the short term time period. So once it closes above that level, and then once again it has to fill the gaps from last 3 4 days, especially from the August 1st. So it has to fill this gap. Then only we can see then that trend has been changed. But right now, looking at the momentum chart and on the larger time frame chart, especially in the weekly chart, all the momentum has been declined, deteriorated, and MACD is turned negative this week, especially. Let us see. Still one day to go. Let's see how it goes. So the key level to watch on the upside is 25,000 to 200, 300. Then downside, if it breaks below that recent low, which is around 24,500 kind of level, so then we might see some more further downside towards 100 DMA, as well as 100 DMA, as well as 23,300 kind of level. So momentum is lagging. Some stocks are gaining, and some stocks are losing the strength in this particular sector. So let us see how it goes. And the next sector is Nifty Realty. So here also, especially from this week, there has been a trend change. The larger time frame index, it has break below that 21-week moving average, currently hovering around that level. So last couple of time it has given a very good support around that level. But this time around, it's likely to close below its 21-week moving average. So there is going to be a trend change in Nifty Realty as well. So on the daily chart, that this level, that is around 11,123. So that is a level it's facing a resistance right now. So and also it has broke the short-term moving upward sloping trend line from connecting lows of March. So currently hovering around its 100 DMA. Let us see if it holding that level for some more time. It may hold this level despite the positive news from latest amendment in the realty for the tax benefit. Despite that, Nifty Realty still has been struggling. So on the upside, 11,030 is a key level to watch. So any short-term bounce can be expected once it crosses above 11,030. So towards 1,100, 1,080 kind of level. But on the failure to hold that above 9,000, 985, 980, 985, 980 kind of level, so we might see 200 DMA as the next level of support for Nifty Realty. So that is going to be a 60 to 80 points of fall we can expect if it falls this recent low. And the next sector is Nifty Energy. So this particular sector is still trading sideways despite the weakness in the overall market. But however, if you see the daily chart, it's still trading in this upward sloping parallel channel. So we might expect continued trend this kind of sideways range. So a few of the stocks, like majority of the energy stocks, are still trading sideways, like Reliance, BPCL, SPCL, or many of them gave a breakout in the last week of July, but failed to hold that breakout level and once again moved to sideways. So same thing we can see in the index chart also. So right now, this level, that is for 40,800, is a key level to watch on the downside. On the upside, 44,000 is a key level to watch. So either side, breakout or breakdown, we might see that kind of trend in Nifty Energy. So that's regarding Nifty Energy. And the last sector from my side is Nifty IT. So Nifty IT, especially, it has given on the weekly chart, it has given a breakout, but right now that breakout has been likely to fall short, and it likely to fail breakout might happen this week. So if you see the daily chart, that it is retesting that breakout level as of now, especially from the last week, where US recent recession fear and IT stocks is the major, where service sector where give the majority of services to US companies, and that is the main reason where IT stocks have been under pressure. And also Infosys, it's trading lower every day, and this level, that is around this level of 38,500 kind of level, is a key level to watch on the current right now. So if it breaks below that 13,500 level, so we might see some more downside towards 37,000, and followed by 36,000 kind of level in Nifty IT. So on the upside, it may face some resistance around 40,500, 600, 700 kind of level. So this is going to be a very volatile days for Nifty IT for going ahead. So fresh entry at current juncture can be avoided since the momentum has been lagged. My momentum has been lagged in the Nifty IT. So better to wait and watch whether it will retest or not. If there is a very good reversal in Nifty IT, then we can look into that particular stock as well, as of now. So I have discussed few sector, and last two sector has been pending, I guess. Nifty
Yes,
metal and media.
metal and media. So I'm sharing my screen again
Okay.
so I can show the chart. Yeah. So this is the metal chart, Nifty metal daily chart. And see, this after touching almost 10,000 and crossing 10,000, there was a top formation happened in this metal index. And now it is around 9,000. It has breached 100 DMA. I can see here this green color line. It has breached this 100 DMA with gap down opening and trending below it. If I draw a trend line here, so it has breached this trend line also. See this trend line, the trend line starting from the level of 6,300. That is in the month of November 2023. So I can say it has breached almost 9-month-old trend line in this week with gap down opening and comfortably trending below it. Current range is around, roughly it is trending in the range of 9,000. And here today on August 8th, I would, or I can say, I would dare to take a bold call and share my bold opinion with you regarding this metal index, that I am expecting a major serious fall in this, if I am not wrong. So I'm expecting a major serious fall in this Nifty Metal Index in coming days, coming weeks, and coming months. Obviously, if I'm expecting any major gain on major fall in any particular stock, on any particular index, on any particular thing, if someone, not only me, anybody. So obviously, it is not going to happen in overnight. So like. When this reality index, just give it, like, if you give an example to you. So when Nifty reality index has given breakout around 360, 370, at that time we have expected 4-digit kind of levels, and that was happened over a period of time in 3 years. So same thing like that here I am expecting, if I am not wrong, my analysis is not wrong. So maybe current rate of this Nifty Metal Index is 9,000. It has already corrected 10% from the top level, that is 10,000. And I'm expecting another from current level, another 20% at least kind of correction in, or maybe beyond that. But let's take the example of 20% from current level. So I'm expecting another 20% correction may happen in coming weeks and coming months in Nifty Metal Index. So in my opinion, possibilities are there if everything goes, or everything will go as per my expectation. So maybe this metal index may fall towards 7,000 kind of levels uh, in coming weeks and coming months. But 7,000 does not mean that there is a no in between support area. There is a multiple support area. Um, and during that fall, it may take support also in that range. Possibilities are there. So, but yes, possibilities are there that it may fall up to 7,000 kind of zone in coming months. In between, if I say support, so one major support is placed in the range of almost 20, 8,700, 8,800, or maybe I can say 8,500 kind of zone. That is 200 DMA is also placed in that range. If you see other format of chart where this moving average has been plotted, so this 200-day moving average is placed in the range of almost 8,300 kind of zone. So there is a support, major support area. Then this is the election outcome day that is low, which is almost placed around 8,500. So I can say there is a support area in the range of 8,300, 8,500 zone. Then maybe this zone of this 8,300 is a strong support area. Why? Because if I give you some example here. So this is the breakout level, and then this is the 200 DMA zone. So almost similar in the range of 83, 8,500. So this is the major support area. Then there is another major support area in this particular zone, which is placed in the range of almost 700, 700, 7,500. And then finally, I'm expecting up to this level, which is almost 7,000 kind of zone. So I'm expecting at least like a zigzag kind of thing, that fall may happen like this. I'm not saying it will exactly happen like this, but this kind of fall may happen in Nifty Metal Index in coming weeks and coming months. To turn bullish from here, Nifty must cross and hold about 10,000 from this level. Then only I will assume that there is a trend reversal. Unless and until it is trending below 10,000, or maybe remain traded in the range of 9,000 to 10,000, I will say that it is consolidating in range bound chain, and it may happen anything. Maybe either south breakout may happen. And but most probably, in my opinion, if my analysis is correct, so maybe this is the index where we can expect major fall, almost 20% kind of another fall from current level towards 7,000 kind of zone. But obviously it will not happen to have, it is not going to happen in linear manner. Some zigzags things will be there. They, in between that we will see sometimes we will think that, oh, there is a trend reversal happening, but it may not happen. So possibilities are there of another 20% of correction in metal index. Now, apart from this metal, one more index, which is now after so many months looking little bit of attractive, is media, Nifty media. So last time when we were bullish around, I think if I'm not wrong, 1,700, 1,800 zone, we have turned bullish in a few months back here. Last year in 2023, and it went up to 24, 2,500 kind of level. And we are clear cut opinion that suppose it will cross and hold about 2,500, then maybe it will be ready to move toward 3,000, 3,200. But unfortunately, it failed to cross and hold 2,500 level in this particular zone here. If you see here in this here, it failed to cross and hold. It tried to cross, but it failed. And there was a gap down opening happened, and there was some negativity. And after that it has retested almost, or again it has fallen up to almost 1700, 1700, 1800 level. And from that level there is some bottom formation happen here, base formation happen in this particular zone, and now it has given breakout above that, and there is another bottom, another sideways kind of things are happening. But not only index, but after analyzing lot of components or lot of stocks belongs to this media space, I can say some reversals are happening, like G News and TV18 broadcast, PVR Inox. So I can say some positive tractions are happening in all these stocks and this particular sector. So maybe possibilities are there that this particular index may turn positive, and this stocks from this particular sector may turn positive in coming days, coming weeks, and coming months. And maybe India, if this particular index, media index, may be ready to move toward at least 2500 kind of level. So from current level of almost, if I talk about Nifty media, so current level of Nifty media is approximately placed in the range of 2000. Current rate is today's close around 2050, and 2500 kind of levels I am expecting. So almost a 20-22% of gain may happen in this media index. So almost exactly reversal to metal. Media may show some kind of gain or outperformance in coming weeks and coming months, and may be possibilities are there that it may be ready to move toward 2500 kind of level. So just keep watching media stocks, especially this big media group, TV Today, Network 18, then this G Entertainment, PVR Inox. All these stocks is saying some positivity is happening on the chart, and maybe it will convert in a strong positive trend in coming weeks and coming months. So to just follow and just keep watching this stock and this sector. From Nifty 50 perspective, it does not have any serious weightage in that. But yes, from individual sector perspective, maybe one can consider a buy one, or one can explore for a buying opportunity in this particular space. So I think we have discussed all the sectors. Now let's move on query. So we will try to give it cover maximum number of queries in next 15-20 minutes or 25 minutes. So first query
Um,
of the day is, uh, can you open the
Something.
this chat box so people can start asking queries? Yes.
Yes.
So first query is Jidus. I'm taking randomly.
Okay.
Jidus Life. So this pharma stocks in confirmed uptrend. This stock, and this particular stock is still forming higher top, higher bottom formation. You can see here in this particular area, it is consistently forming higher top, higher bottom formation, and trending above all key moving averages. If I draw a parallel channel on this chart, like this way and this way, so I can say it is standing in a parallel channel. Only one thing is that it is overextended, I can say, as per our methodology, that only methodology. See, there was a pivot breakout, and maybe it, because according to this pivot breakout, that this is the target, that is 10% pivot level breakout is here. And if we give target, so here is a target, and stock has already gained 10% from the pivot breakout. So that is the only thing. Otherwise, trend is positive, sentiment is positive in sector, in particular stock also. So maybe possibilities are there that if that current ongoing trend may remain in continuation in coming days, and stock may generate another 10% of kind of return in weeks and coming days and coming weeks. So in my opinion, I would not suggest to add or buy fresh entry or take fresh entry from a long-term perspective or sorry, a short-term perspective, because if you consider risk-reward ratio, risk-reward ratio is not in favor. That is why only I am saying that otherwise, if someone is holding, so I would suggest to hold and just ride the current ongoing rally with appropriate stop loss. So instead of buying or adding fresh position, I would suggest to hold this stock for further uptrend in coming days and coming weeks. Apart from that, I'm taking Godrej Property and Nestle. So Godrej Properties, Godrej Properties. Yes. So Nifty Realty Index, if I say, so now Nifty Realty Index is giving some sort of serious correction, current phase of market, and maybe that correction may remain in continuation in Realty Index. And few days back we have recorded a short video on market in this week only, and in that also I have said my opinion that maybe after almost multi quarters rally in Nifty Realty, some serious correction started. And likewise, I'm expecting same thing in Godrej Properties as well. That see, if you see, stock has formed here some sort of top. If I this do some annotation, so there is some top formation happened in this particular zone, and now there is a 50 DMA breakout, this range breakdown, and it has approached to 100 DMA, this green color. Even though it is still holding, but in my opinion, I'm expecting one day it will fall this level, and maybe it will fall further toward at least 200 DMA or up to this level. So I'm expecting some negative kind of thing may happen. Possibilities are quite high that it will sooner or later this particular stock will give breakdown below this 100 DMA, this particular zone, and maybe it will fall toward almost 2300, kind of zone in coming days. So current rate is approximately 2800, 2850, and expectations or possibilities are quite high that it may fall toward 2400. So just plan your trading or investing or holding thing in this particular stock according to our opinion. So maybe possibilities are there that it may fall further from current level.
Next
Apart
one is
from,
Sunpharma. Sunpharma.
sorry,
Sunpharma.
Sun Pharma.
Yeah.
So Sun Pharma, yes. So Sun Pharma, as per O'Neill methodology, this there is a breakout happened, stress to consolidation breakout here, and there was a pivot breakout happened, and after that pivot breakout, they from the last almost 2-3 weeks, stock is trending in a very tight area, range bound zone. So and if you see, positivity are there in the space. So maybe in this stock also, Sun Pharma, this ongoing trend may remain in continuation. So one can keep watching this stock from a bullish point of view. Possibilities are there. This current ongoing trend may remain in continuation in this Sun Pharma, like in Zydus Cadila. Next,
So
Adisa.
let me take a few queries.
Okay. So I'm yeah.
Started steering. Let me start with Florochem. So Florochem from last, if you see the recent trading days, it's been trading sideways with the no trend actually, and a large consolidation zone. And if you draw a trend line connecting from low highs of this, so it might come here somewhere around this level. So it is about to give a breakout, but however, EPS do in 5 days. So better to wait for the earnings, or else better to, even if you are taking a call before the earnings, it's kind of risky at current situation, at the current market scenario. It's bit risky. Still want to take the risk. Once it breaks out above that trend line, then you can go with the stop loss below the swing low. uh, Stock is looking positively, but buying volume is not that much is coming, though price action looking sideways. This breakout level is going to be a huge for this particular stock. Next one is ONGC. So if ONGC, it has been reported a very good number, but few after that it's trending sideways. So this stock, which might facing resistance around this gap down low. So that is around 828, 830 kind of level. So that is going to be crucial for this particular stock. So fresh entry, one can avoid this stock right now, but for those who are holding still, so 330 is going to be a very crucial hurdle level for ONGC. So once it breaks out above that, so we might see on previous all-time high, that level, that is 344 kind of level. That key support level is placed around 50 TMA. So that is going to be a key support level for ONGC. Next one is HBL Power. So HBL Power not yet reported earnings. I think it's likely to report earnings today. But if you see last this price cluster range, once it breaks out, so there has been a negative volume on the higher side. So today also there has been a negative volume on the higher side. So let us see how what happens in the future days. So if that breaks out on the higher earnings, then 640, 647, 650s are a very good level to watch on the upside. So once it breaks out, we can see trend change in this particular stock. So after the large consolidation range, but on the downside, this swing low can be kept as stop loss. That is below 600. I think below is low is 560 kind of level. So that is going to be a stop loss for this particular stock. So right now it is not even a buy or sell. So once it earnings reaction, how it comes, then only we can buy. Next one is LICI. So after the breakout on the especially in this particular July, so after that it has been retesting that breakout level. So and also from last 2 days, that breakout level bounce, retest and bounce has been happened. But today it I think it marginally trading around that 21 DMA. So it's closed nearly flat. So those who are want to take a fresh position, one can go with this swing low as stop loss and look for the ride this trend. But looking at the buying volume at the recent days, it's not so great in this particular stock. After that breakout, fresh buying is slightly lower on this particular stock. So let us see what happens. So one can go with the swing low or 50 DMA as a stop loss in this particular stock.
One
Next one.
question in between, Yatisha.
Okay.
This Kadambari Ravi Kiran is asking about why don't you people cover short selling? So it is a quite debatable question. Because first, if I say about short selling, so it is not in our policy. Because we only follow uh, buy only strategy, and it is nothing hidden. It is clearly mentioned in our website. First thing. Another thing is that you nowadays if you see that SEBI is also encouraging sorry, not encouraging, discouraging especially retail investor to participate in future and option. If you are considering short selling, so obviously you have to play in a future and option segment. Then only short selling is possible, because in selling or short selling, doing short selling in intraday market is quite injurious to your financial health. And nowadays SEBI is trying to discourage people from that. So obviously now trend here, till now I can say it was like free kind of market where everyone was participating in future and all. But somehow directly or indirectly I can say now SEBI is planning to restrict retail people or people like us, you, me and all. to stay away from this future and option segment, because future and option, this derivative market, actually this particular segment is a derivative market, and derivative product is a good product for hedging, not for speculation. But here in India, speculations are happening, and because of that, SEBI is also very much concerned about market and market participants, and especially retail investors, because there are so many reports from exchanges, so many reports from SEBI, so many reports from so many things, that almost 90% or more than 90% people are loser who are playing in this particular segment. See, if you are doing some systematic rule based approach like we follow in MarketSmith and TraderSmith, so over a period of time, I'm not saying that it is easy to make money, but if you are consistently following your strategy, your policy, so over a period of time, it is quite possible that you will generate a handsome return on periodic basis. Not on all trade, obviously, or not all type of market. Like from the last few days, market is a little bit jittery. So sometimes you will lose and sometimes you will gain, but net to net, most probably possibilities are there. You will remain in positive side of market. But here, if you are doing speculation, if you are doing lot of derivative, lot of shorting, lot of buying, so possibilities are there that especially low exposed people in the market, especially retail investors, these possibilities are quite high, is that they may lose money in one fine morning, or in some days in very early age of your investing cycle. So that is why we are even never try to encourage this future and option segment or derivative segment, and that is the reason that we are not take any position or not advised to do short selling. And maybe now regulatory bodies are also trying to discourage people from these activities, and gradually, I'm not saying that it is a one night or 1 month game. Gradually, maybe very soon, you will expect this current future and option contract size may going to increase gradually. Maybe currently I think it is up to 20 10 lakhs, but maybe in next few months only I'm expecting it may go up to 20-25 lakhs also in next 12 months. So these regulatory bodies are also discouraging. So that is the thing. Otherwise, there is no, it's up to you. That is why we try to share our opinion via various platform, via this Bazaar Pe Charcha. So you can take cues from our opinion. Like I have just we have discussed about this metal. So suppose I'm not saying that first of all we will be 100% correct. Suppose we are analysis is correct and we are going in proper direction. Reality, we are expecting that some sort of more serious correction. Metal, we are expecting some sort of serious correction. So you can take cues from that and you can do as per your own way, your own risk. But we never encourage here to do derivative trade, and that is the only reason, because short selling is only possible in derivative. That's why. Yes, Adisa, please
Okay,
continue.
so let me continue with the IRCON. So IRCON looking weak after the recent breakout has been failed over here, and it's recent low trading lower. Not only IRCON, all the railway stocks have been PSU stocks are facing some jitteriness, and it has been eventually breached its 50 DMA. So also, if you draw a trend line from the low, so that also it has been breached over here. So 50 DMA. So here, its fresh entry can be avoided. So those are bought earlier and still holding this particular stock can book partial profit, or one can exit completely from this particular stock. It's better to exit and stay in the cash right now. So fresh entry can be avoided. And Indigo. So Indigo paints, uh, especially in this July, all the painting stocks has been gained, and after that one breakout, it moved to sideways. So it currently trading at sideways range. So that is level 1420. That is a key support level for this particular stock. But right now, this kind of no trade kind of zone. So once it breaks out above this 1500 kind of level, one can look for this particular stock to move towards pivot level. But as of now, it's looking slightly weak. If it fails to hold that 200 DMA, then we might see it once again coming back towards its sideways range. And the next one is Jindal also. So its stock is still trading in the sideways range. So it has been breakout retest has been also happened on yesterday, and after that today is trading in the sideways range. So those who are holding from the pivot level then continue to hold with the stop loss below its 50 DMA. And fresh entry, those who are willing to take, one can take with the tight stop loss around 21 DMA or 50 DMA as your stop loss. Next one is Arkin. So clearly, breakout has been failed. So better to exit. So volume is also coming at the higher level. So better to exit. So once again, if it comes back towards pivot level, so that is 760 kind of zone, then then only one can enter. So as of now, one can exit from this stock right away. Next one is Newgen Software. So here also breakout has been failed, and it has been breached that 50 almost touched that 50 DM, and today there was a slight bounce. Though fundamentally strong stock, volume has been slightly lower in today's bounce. So now we can't say the trend has been changed. So it's likely to consolidate in this particular range. So it is going to be a resistance level of 1070, 770, 80 kind of level. So once it breaks out about that 1080, one can go with the on the upside. But right now it's still trendless trade kind of trade over here. Next one is Uno Minda. So here clearly it's look at this breakout. After that breakout, there is a huge run, and when the stock has been falling, so it's falling in the huge volume. So that is it's a first sign of weakness over here. So once it breaks below 21 DMA, one can exit. But current level, so it is clear that 21 DMA, once it breaks out, it took a support around 50 DMA, classical support and resistance level over here on the moving average. So here 21 DMA moving resistance, and once again it breaks below 50 DMA, and once again it might face around 50 DMA resistance. So one can exit, those are holding from the breakout level. One can exit directly from this particular stock and stay in the cash. Next one is TVS Motor. So strong earnings from TVS Motor, but however after the breakout today it's slightly down. So the volume is not much in today's session. So those who are holding from the pivot level, they continue to hold with stop loss tighter below 50 DMA. So that comes around 4.5%. So if it goes up, then there is a good chance of it might give another uh, 5 to 6% of gain in the next coming days. But on the downside, 50 DM is a key level to watch on the downside. Next one
Okay,
is
this also
somewhat
I am taking, and
okay.
in between that, I would like to add one more thing regarding TVS Motor and this Tata Motor. There are so many auto stocks.
Okay.
So see, this auto index, Nifty auto index has reached 50 DMA. As per O'Neill methodology, it is in under pressure because it has decisively breached 100 DMA, 50 DMA with gap down opening, and now it is currently placed around in the range of 25,000. So see, now auto index, unless and until it is trading below 26,000, this under pressure kind of scenario may be there in technical perspective. So just keep watching level of 26,000. The day it will cross about 26,000, then only we will assume or consider this trend reversal. Otherwise, this current ongoing trend may remain in continuation. And most probably, if suppose it will remain traded below 50 DMA, so maybe next target would be around 23,000 kind of zone in the range of that 100 DMA. And maybe one can expect this current, if correction will extend further, so one can expect level up to 22,000 also. So possibilities are there, but still there is a no clear-cut negativity at current juncture. To turn more negative from current level, it must breach below 24,400 Nifty auto index. And likewise, stocks are also behaving. If I talk about Tata Motor, Like there is a question like Atisa was discussing about TVS, that even though there was a good number, but stock has not reacted on that numbers and everything. Same thing happening with Tata Motor also. Tata Motor, if you see, there was a good breakout happened in the range of 1050 June, and after given breakout around 1050, it went up to almost 1200 kind of level, 1180, and there is a sharp fall happen in last couple of days, and currently it is retesting that breakout level. So still it is holding that breakout level of 1050. But suppose now from here onward, suppose it will remain traded below 1050. If I talk about today's closing price, so it is in the range of 1040. So suppose it will breach below that, remain traded below this 1040.50. So maybe 990, 980 is a major support area in Tata Motor. But suppose it will breach 980 kind of zone, 990 kind of zone, then this Tata Motor also enter into some sort of serious correction, I can say, and then it may fall another 10% kind of thing. But unless and until it is holding this level of 980, 990, possibilities are there that it may bounce back. So if someone is holding, so just keep watching this stock with the stop loss of 980 in Tata Motor. And like this I have discussed about TVS Motor uh, stock. So
Uh,
overall, maybe it is still in sideways kind of thing with bullish bias. So, but yes, to turn more bullish in auto sector, auto index must cross and hold about 26,000. Next is, can you suggest me stock
yeah.
at this side?
Next one is last three are there. I think I will finish that.
Okay, please.
Next one is Mothers, Samvardhana Motherson. So strong bullish stock and in the recent past. So once it breaks out, it has been a very good run and strong fundamentally also. But out recently, it has breached that 50 DM with the gap down. So here clearly, it is facing a resistance over here. So it's been I think it's better to exit from this particular stock and better to stay in the cash. It's currently hovering around its 50 DMA, and the first resistance will make face around 1900 kind of level. So anything once it breaks out above that this downward sloping trend line, then only we can see trend change might happen. But right now it's making lower high, lower low price structure. So stay away from this particular stock right now. Next one is LT Food. So strong stock and currently does almost 20-25%. And one better to one those who are holding from the breakout level, better to book partial profit around this level and wait for the anything break below its 21 DMA as a stop loss. So currently, if you see from the last, especially from the last 2 months, it's been holding that 21 DMA nicely. So one can keep a tight stop loss below its 21 DM and continue this trend. But fresh entry can be avoided right now in this particular stock. Next one is Avanti Feed. So after that, this consolidation range, it has been breakout on I think budget day. During the budget day, because of government of India has given a few positive news for this particular shrimp business. So after that particular breakout, it has does that power flag and once again it's moved to the sideways. So right now its trend is still bullish, but however it has retested that breakout level. Those who are willing to take the risk, one can go with this particular swing low as stop loss, that pivot level with current for the further upside. But at looking at the current juncture, those who are willing to take the risk, better to go with the half size of position or not take a partial position in this particular stock and ride this trend. Anything we
So
have
this
missed?
Avanti Fates and this one more stock, this Apex
Apex
Frozen,
frozen, yeah.
both are looking quite attractive at current juncture. So we just try to discuss with you here. Just keep watching this stock. Maybe some more positivities are there on the chart in coming days and coming months. Yes, please continue, Andy.
Next one is I think
So I'm taking this Tata Motor. Sorry, Tata
uh,
Power.
okay.
Tata Motor already discussed. So Tata Power. So Tata Power today only it has breached 50 DMA, and negativity has extended further, and suppose it will remain traded below 50 DMA. So maybe I'm expecting at least another 10% of kind of cut in coming days, and maybe stock is ready to move toward 380, 370 kind of zone in coming days and coming weeks. So possibilities are there that after almost 3 months of sideways kind of thing, now it is ready to move toward 380, 370 zone in Tata Power.
Next one is HAL.
HAL. So
Yes.
HAL, there was I was reading a news today only. Today only I was reading a news about HAL that this fund houses has triggered sell button in HAL in last couple of weeks. And if you see, same thing is quite reflected in this chart also. Stock has breached all key moving averages 50 DMA. It is while it is still holding 100 DMA. So 100 DMA is approximately in the range of 4400. So 4400 is just critical support area, I can say. Suppose it will breach 4400, then one can expect more downfall may happen in this stock toward maybe another 10%, 15% kind of thing in this HL. And now and then this stock has already started forming lower top lower bottom formation with lost momentum on a weekly chart as well as on daily chart. So obviously one should not consider to buy this stock. Valuation wise also this stock is not that much attractive at current level of price. So I would suggest to avoid this stock for buying purpose, at least at current point of view. Possibilities are there that suppose it may give some bounce back from current level. But yes, unless and until it is not holding, crossing and holding above 5200 kind of zone, it may remain traded in sideways only. So that is why I am expecting either sideways or maybe falling below this 100 DMA, that is 4400, toward maybe another 10%, 15% of cut. So in both way, it is not as advisable to take long position in this stock, at least in my opinion.
Next one is Hind Copper.
Hind Copper. So Hind Copper came from this metal pack, and we have quite a negative opinion about Hind Copper. Sorry, metal stock. So I'm not saying that some bounce back may not happen in this entire metal pack and this Hind Copper. If you see Hind Copper, so Hind Copper it has already breached all the key moving averages except 200 DMA. It is still holding 200 DMA. 200 DMA it placed in the range of 275. And in recent fall, it tried to touch 200 DMA, that 225, 275. So that is the major support area, 275. Suppose it will breach that area, that zone, 275. So more negativity may happen may accelerate in downside. But yes, at current level, 275 is a zone to watch as a major support area. Suppose some bounce back will happen in this particular stock. So maybe bounce back may continue toward 320 or 325. Otherwise, I'm expecting this particular stock now here may remain traded in the broader range of 275 to 325 kind of zone. So roughly approximately 20 rupees in downside and 20 rupees of upside. It may remain in traded in sideways at current juncture. But suppose it will breach 200 DMA or 275. So more negativity will be there in this particular chart. So I would suggest to avoid for buying purpose this particular stock.
I think it's already 5:45 and we'll quickly
Okay, so can you just suggest me stock? So I will
uh,
try to cover maximum amount.
okay.
Oh,
Atul Limited.
Atul Limited. One second, Atul. So Atul Limited chemical stocks are doing good. This particular stocks is also doing good. Current rate is approximately 8,000. Trend is positive. Maybe this chemical stocks trend may remain in continuation in coming days, and this stock may be ready to move another 7 to 10% in coming days. Next,
Next one is Deepak Fertilizer.
Deepak Fertilizer. Trend is positive. This fertilizers, there are so many fertilizer stocks which are doing good. Fresh position, I would not suggest to take fresh position, but if someone is holding, just ride this ongoing rally.
Gravita.
Gravita trend is positive. Just ride the ongoing rally with the stop loss of around 1550.
Next one is National Aluminium.
National Aluminium again is showing some sort of negativity. It has breached 100 DMA decisively. Today also it was negative and currently placed around 1. I'm expecting sooner or later this stock is approaching to our 150. So
Next,
negativity are there in my opinion.
NCC.
NCC. NCC has breached 100 DMA, sorry, 50 DMA, and realize a short-term trend line, also short-term mid-term trend line. So maybe a downside may accelerate further toward at least 280 kind of zone. That is almost 10% from current level in coming days and coming weeks.
NBCC. Trending
NBCC is just
sideways.
yes, standing sideways and just holding 50 DMA as well as upward sloping trend line. Suppose it will breach this current level of 164. Current rate is 169. Suppose just keep watching 163, 164. Suppose it will breach, so maybe it may move toward 150 kind of zone.
Natco Pharma.
Natco Pharma trend is positive. Even today also it has recorded fresh all-time high. And there are 50 selective stocks from pharma space which are really doing good. So one of that is Natco Pharma. It may remain in uptrend continuation may remain in coming days also. So
Next
just
one is
ride the rally. Yes.
Intellect Design.
Intellect Design Arena. Intellect Design in Arena is just hovering around 200 DMA and a major support is placed in the range of 900. Current rate is around 937. Suppose it will breach 900, so maybe one can expect more serious fall in this Intellect Design Arena. So 900 is a range, but yes, at the same time some bounce back may happen. I'm not denying for that, but 900 is a critical level to watch. 890 to 900 is a major support area. Suppose it will fall below that, so more negativity will be there. But suppose if it is holding above 900, so some bounce back cannot be denied in coming days. So I would not suggest to buy this stock at current point of time because risk is quite high.
Hind
Next,
Zinc. Hind Zinc.
Hindustan Zinc, another
Weak
metal
stock.
stock, weak. It has already started forming lower top, lower bottom formation, trending below 50 DMA. Maybe gradually it is approaching toward at least 550 kind of zone, almost 10% from current level.
Last one, GRSC.
GRSC. GRSE,
Yes, Garden Rich Shipbuilders.
Garden Receipt Builder. So it is still holding 50 DMA, but there is some negativity momentum. It has lost momentum. So 50 DMA is a hope. Suppose it will hold, even though it is still holding. So maybe some bounce back may happen. But suppose it will breach 50 DMA decisively, which is almost splashed in the end of 2000. So maybe more negativity will be there. So from buying purpose, if someone is interested to buy, range is to 2250. Unless and until it is trending below 2250, it will remain traded in sideways. So I would not suggest to take long position in this stock at current juncture. Suppose it will give breakout about 200, 2250, then only I would suggest to buy this stock. Otherwise, not. Most probably it will remain either it will remain traded in sideways, and suppose it will be give a breach below 2000, that is 50 DMA. So more negativity will be there in coming days.
I
Oh, so
think
it
we
is
have
almost
covered.
550. Yeah.
Yeah.
So it is almost 550, and I think we have covered most of the stock pre-call. One question is that pre-call. So pre-call MSI is holding. So I will suggest to follow up MSI strategy because we have this our the MSI have exposure. So maybe they will take currently there is a negative. So maybe they will take action. Suppose it will be 50 DMO or anything like that. So maybe they will take accordingly. They will take according actions. So just follow market, Smith. So we will try to cover maximum number of queries in today's session. I'm not saying we have covered 100%, but yes, 80-90% queries we have covered. If someone queries has unanswered, so obviously I sorry for that, and I would suggest to write an email. We will definitely try to reply you within 24 or 1 or 2 working days. And if it is not, then that we will try to cover that query on priority basis on next Bazaar Pe Charcha session. So thank you for joining the session today. That is 8 August. Let's stay tuned with us and just be remain informative about market. I'm saying I would try to give the closing alert to you that market may remain volatile in coming days and coming weeks. So follow some cautious approach. Thank you.
Thank you, everyone.